Hello, everyone, and welcome to another ASUG Partner Webcast. My name is Maureen McInerney, Partner Marketing Specialist here at ASUG, and I'll be your moderator for this event. I'd like to thank everyone for taking the time to join us today for this presentation. Today's webcast is being recorded. The link to the recording and the accompanied slides will be posted to the ASUG website calendar of events, and all registrants will receive a follow-up email with the link to those materials once the webcast has concluded. I'd like to remind our audience members that you can submit your questions at any time by clicking the purple Q&A button at the bottom of your screen. Today's webcast is Ask a Fixer, Setting Up Transfer Pricing Between Plants, sponsored by ERPfixers. ERPfixers connects you with SAP experts to obtain quality, immediate solutions for your SAP system. ERPfixers consists of thousands of consulting experts in all SAP modules who are ready to help and assist with their knowledge in SAP. Just to let you know, all ASUG members have immediate access to the ERPfixers platform through the ASUG website. Our speaker today is Paul Ovigele. Paul has worked as an ERP financials consultant since 1997 in both North America and Europe, specializing in implementing the SI and CO modules along with their integrated areas for companies in various industries. Paul speaks at numerous SAP conferences, offers strategic and functional level trainings to companies, and is considered one of the leading experts on material ledger. Paul is the author of 100 Things You Should Know About Financial Accounting in SAP, reconciling COPA to the general ledger, and introducing the material ledger in S/4HANA. And with that, I'll hand it over to Paul to get us started today.
Thanks, Maureen, and thanks everyone for joining this webcast. As Maureen said, this webcast is on transfer pricing between plants. And the webcast actually mislabeled the webcast a little bit. It's not just within plants, it's also between profit centers and certain other fields that are not just the company code. So we'll talk about what needs to be set up for transfer pricing between profit centers, how standard cost can be calculated for profit center transfer pricing, how transfer pricing postings look in the profit center view, and what are the options to convert to profit center transfer pricing in S/4HANA. So first, what is transfer pricing? It's an agreed-on transactional price between two entities that are involved in a business. Normally, transfer pricing is carried out between different legal entities, like company codes. However, in SAP, not only can you have transfer pricing between legal entities, you can also have them between other entities like profit centers and plants. So what are the prerequisites of transfer pricing? So I don't know who's, the people in this webcast listening that have varying experiences and varying roles in an organization. You might be doing the configuration, you might be a finance user. So I'm going to show some of the settings that have that involve different parties. So the first, from a configuration standpoint, transfer pricing requires a few configuration steps to be carried out. One is to activate a valuation view, a profit center valuation view. So this transfer pricing functionality we're talking about is predominantly part of the profit center valuation view. I've put the transaction there, AKEM. It allows you to activate an extra valuation view in your controlling area. So in this case, we have profit center valuation group currency being activated. And I'll talk a little more about that. The next thing is to activate material ledger. Okay. In order to have this transfer pricing functionality, the only way to do it is to have material ledger. There's no alternative. And just for those who have heard about material ledger, I'm not talking actual costing. If you already have material ledger actual costing, that's fine. But if you don't need actual costing, you don't need to activate it. You just need to activate material ledger. And in fact, one of my motivations to present this webcast, it was part of an exercise we were doing with several companies on how to transition them to S/4HANA. As most of you know, and if you don't know, you should know, material ledger is required for S/4HANA. And I normally get questions like, okay, what do we need to do to accommodate this requirement of material ledger in S/4HANA? And I think although that's a valid question, it's not the right question. The question should be, what can we do now that we know we're going to have material ledger in S/4HANA? And it was from that question we started thinking, okay, a lot of companies may not need actual costing, but they may need a material ledger, or they may need functionality that material ledger can provide, but they never implemented that functionality because they thought, oh, we don't need material ledger. But now that in, I'll say 3-4 years, most SAP companies are going to have material ledger. If you have materials management, you're going to have material ledger. So now what kind of benefit can we have from that? So that's this is one of the benefits, right? So activating material ledger is a benefit. And I'm not saying wait till S/4HANA. I'm saying if you want profit center transfer pricing, why not just activate it now? And there is a conversion. I'll talk about that later. The activating material ledger is one of the requirements, and it's activated on a plant basis. The next one is assigning currency type to material ledger type. That's another configuration setting. It just means that now you've activated profit center valuation, you need to assign profit center valuation to your material ledger. Okay, so just think of it as 3 things. 1, you activate profit center valuation. 2, activate material ledger. 3, assign profit center valuation to material ledger. Okay, I make it sound very easy. It's not that easy. There's a few other nuances to it, but basically that's it. You're just activated a new valuation area. And so if anyone's heard of other things that need to be done for material ledger, that doesn't need to be done. It does not need to be done for this. This is just an activation of the valuation view and the material ledger for your plans. So that's the from a transfer price, from a material ledger and profit center valuation. What are the prerequisites? Now, what actually does need to be set up in the system when you have all that set up? The key configuration is it's a mix of configuration and master data, and I'll point it out where it's config and where it's master data. This transaction AKEZ, called Basic Settings for Transfer Pricing, is where you set up the rules, the conditions, and all the other settings for transfer pricing in the system. And just another thing about this whole transfer pricing thing, I started SAP in the late 90s. I think profit center transfer pricing was already available. However, there's hardly any information out there about profit center transfer pricing. You try Googling profit center transfer pricing SAP, you'll hardly find anything. It's almost like either nobody uses it or anyone who uses it just doesn't talk about it. It's just it's excellent functionality. I've heard a lot of companies ask, how can we do transfer pricing just between plants and profit centers? But nobody talks about this functionality, about profit center transfer pricing. So the transaction is AKEZ. That's the main configuration. And one thing you'll see about, with this transaction is that a lot of the settings are very similar to SD settings: condition types, access sequences, condition records, pricing procedures. And SAP does a lot of different functionality in different modules, really has the same underlying data structure. So it's similar with transfer pricing, right? It's using those same kind of tables that are used for SD and even for overhead costing sheets and several other things that require conditions and access sequences, right? So you might be familiar with some of the screens that I will show in the next slides. So the first one's condition types. Now, if you know what condition types are, they carry values that are meant to be used for something, maybe for pricing or for percentages or some other type of requirement. In this case, for transfer pricing, there's about three main types of conditions, and I'll go through at least a couple of them here. A base condition type for standard cost and a markup condition type for standard cost. So what's the scenario there? Let's say, for example, you have a profit center, and I'm going to demo this later, but you have a profit center that transfers material to another profit center. and you want that transfer to be done on the markup. So basically, you want the sending profit center or sending plant to make a profit and have revenue generated. As you know, in the standard SAP system, the normal view is that it's not a revenue generating thing unless it crosses over company code. But if you want it to be, and you want it to be based on standard price, you will set up a condition called standard cost. That's the one called TP05. And you'll have a markup condition that adds a percentage to that. Then you'll also set up an access sequence. Again, this is another SD term, right? I say it's an SD term because SD, sales and distribution, uses this functionality heavily for their own requirements. So an access sequence just basically says, what fields are these conditions going to be based on? For profit center transfer pricing, there's a standard access sequence, TP00, so you can create your own. The standard access sequence, and I'll show that when I'm doing the demo, is dependent on several things. One is dependent on material and receiver profit center, or it could be dependent on material alone or material group. And these are in sequence. They take one takes priority over the other. So you actually have to choose what you want your conditions to be based on. Do you want it to be based on material and profit center? Do you want it based on material group? Or if you created your own access sequence, you could pick other fields. And I'll show what fields are available to create an access sequence from. Okay. So that's the access sequence for your condition type. Then the other thing that, again, maybe you're familiar with, this is more from a master data perspective. This is a master data setting, is a condition record. So once you've created your condition type, and you created your base condition, and you created a percentage condition, then you create a condition record. This is what holds the value of the transfer price. So I said I have a markup condition, which is based on standard cost. That's set up in configuration. Now, the master data said, okay, what is that percentage of standard cost that I want my transfer price markup to be based on? And that's what this condition record does. Okay, so as you can see on the screen, it's set up on controlling area and plant, and it tells you enter what material you want that markup to be based on. Again, very similar to SD. I think the SD transaction is VK11, VK12. That's how you create condition records for customer prices. Same thing here, right? Same exact table. The look and feel is exactly the same. A little nuance here is where I show the plant, that's the sending plant. Because here, remember, we're talking about transfer from one entity to another, one non-company code entity to another. In my case, if I enter a plant, I'm saying that's the sending plant. And for this access sequence, where it says partner profit center, that's the receiving entity's profit center. And then I have something here where I say this is what my percentage is. So with this setting alone, you could have a material in one plant, sending inventory to another plant, which also has a different profit center, meaning this partner profit center. Or it could actually be all in the same plant. So this sending plant, even if the receiving plant was also 1710, if the receiving plant's material had a partner profit center of YB110, that would also generate the markup. So this is not saying, hey, it has to cross over a plant. It depends on your requirements. Because some companies, the transfer price that they want is when it crosses plant, some is when it crosses profit center. So you could have the same plant, but just two different profit centers. Or you could have two different plants, right? Or you could even have the same profit center is in the same plant. There's different flavors of the way you can have this markup to be generated. So I talked about markup, but then you can also have a transfer price set up on a fixed value. So you could say, hey, I don't care about markup. Anytime this plant transfers to this other plant or this other profit center, I want the charge per unit to be a certain value, right? In this case, it's $1.20. So it says if plant 1710, if I transfer material from plant 1710 to a material profit center YB110, charge them $1.20, regardless of what the standard cost is or regardless of any other thing that's in your normal company code view. In my profit center view, I want it to be $1.20. Now, just like in SD, you also need a pricing procedure for transfer pricing. The pricing procedure, it links different conditions together. So I had said that we have a markup condition and we have a base condition. The pricing procedure is what says the markup condition is going to be based on the base condition, right? So that's what I have. Here, the TP05 is the base condition, the MU01 is the markup condition. And if you see the from and to in the markup condition, I've said it's from 10 to 10. 10 is the step of the base condition. So anyone who knows about pricing procedure would know this, know how to do this. This is configuration as well. So this will be set up in the background, but it just links your markup with your base condition. Now, as I had mentioned in the previous slides that there are two different transfer price methods we can set up. One is a markup and a base, and the other is just a fixed one. For a fixed transfer price, although I haven't shown this, the pricing procedure doesn't show two lines, it's just one line. It just shows the one line with the fixed transfer price condition. Okay. So now that we've set up some of the basic configuration for standard cost and also for just directly transferring material to material in different process centers of plants, let's talk about the standard cost part. Now with standard cost, I know not every company uses standard cost, and as you can see, if you don't know already, you don't need to have standard cost to do transfer pricing, right? Standard cost is just one of the ways you can do it because it's easy. If materials are valued at standard cost and you transfer one material in one profit center to another, then it's easy for you to just say standard cost is my base. I want to add 10% on it, and that's the revenue that this transaction is going to have. So we're going to talk about the standard cost method with transfer pricing and how that works. Another thing I want to say with transfer pricing, I keep talking about transferring material, like doing an STO, a material-to-material transfer. But I mean any transaction that the profit center crosses over. For example, I could produce a material in one profit center or plant, but the materials on my BOM could come from a different profit center or plant. You could also make that constitute a transfer pricing scenario, right? It's up to you. Based on the way you set it up, you could say even when I'm consuming the raw material from another plant, that other plant where the raw material exists should make money from that, okay? So standard cost. So a couple of settings need to be done here. First of all, because we've activated a different valuation view called profit center valuation, it means your standard cost has to have a different valuation view from your normal standard cost. And I'll explain that further later. So two things you need to set up. One, you need a different costing type, right? You probably have a cost. If you use standard costing, you have a costing type right now, which helps you calculate standard cost. You need a totally different costing type, right? Because that costing type tells you what valuation view that you're using. If you use standard costing, you go to, I think it's transaction OKKI for the costing type. If you don't have profit center valuation or group valuation, you probably have one that's connected to the legal valuation view. But now we're adding a difference on profit center valuation view. And because we're adding a different costing type, and that's assigned to a costing variant, it means you have a different costing variant for profit center view. And the bad news here, at least I say it's bad news because I know when I've told some people, they say that's bad news, is that means you need multiple costing runs, right? So if you do a costing run every year, or however often you do it, and now you've activated profit center valuation and you want to use transfer pricing, you need to have multiple costing runs, right? So again, depending on how often you update costs, that might be a pain or not. If you do it once a year, I don't think it's a big deal. You do it every month, then maybe a little more of a big deal. But you need to have these multiple costing runs. And it makes sense as well, because we're saying that, whatever your standard price is in your profit center view is different from your legal view. You don't want it to override the legal view. You want that still to remain the same, but you want an extra view. You're opening up an extra view. And I'll show it in the material master, how you can see both views side by side when you're looking at the material master. So when you calculate the standard cost, something I don't think I showed in my previous screen, but when you have profit center view activated, you have the option of saying that any time there is a transfer price being triggered, if someone is doing a transaction that will trigger transfer price, before that transaction shows you the results, I want a pop-up that tells me what the transfer price calculation is. And I'll actually show that in the demo as well. It's called condition analysis. So in my scenario, I've actually activated condition analysis. So if I'm calculating a standard cost and one material is getting a transfer price based on a transfer to another plant or profit center, then it's first going to pop up and tell me this is what's happening. You have a base condition type TD05 that's the standard cost, and you have a markup. And then when I press enter, then it shows me my cost. And I'll show that exactly in a few minutes. All right. So when you calculate your standard price, then your calculation of profit center transfer price is added on top of the standard cost of the standing profit center. So we talked briefly about standard cost. Let's talk about how does transfer pricing posting look in the profit center view. So another configuration step here is setting up these accounts for internal goods movement, right? Again, this is something specific to the profit center transfer pricing. And the reason you need to set it up is because, as I've been saying, profit center pricing is opening a different valuation view, right? But also from a financial statement standpoint, because companies will want to report like a P&L by profit center, it needs to have specific accounts that show you what's going on in the profit center view. This is another thing that if you try to Google this or look for it, nobody talks about it. Hardly anyone talks about these movements, maybe because either companies don't really use it or because it's just not enough people know about it. So in this setting up accounts for internal goods movements, this is where you set up, there's 4 accounts I've configured here. 1, internal revenue, change in stock, delivery from profit center, and change in stock on the receiver side. I'll tell you what it means. You actually set these accounts up by material type. The reason why SAP has material type as one of the fields is because, as I said, some companies don't want transfer pricing to happen just for every material. Like you might have, like spare